Hi, good morning and welcome to Money Control. This is Morning Trade. I'm Karunya Rao, and over the next half hour, we'll help you navigate today's trading session. We'll help you prepare better for the trading session with actionable strategies, sectoral trends, and we will, of course, be answering your queries towards the end of the show. So let's kickstart and see what the global handover has been like. Now, first up, you have better than expected consumer confidence data and earnings beats from Nike and FedEx, which boosted the sentiment on Wall Street. Indices surged, gaining up to 1.5% each, giving rise to hope of a Santa Claus rally to the end of the year. Also in the Asia Pacific, we've seen stocks open largely higher on positive cues from the Wall Street. SGX Nifty also indicating a higher start for the Indian market. Yesterday, if you look at it, European markets closed firmly in the green as investor sentiment brightens, with Stock 600 ending 1.7% higher. Back home, you have pharma stocks and the entire sector, which saw a very strong resilience in yesterday's trading session. Is it the right time to invest in pharma names? We find out. Also in focus, Reliance Industries, Bandhan Bank and D-Link. All right, let's get started. We have Ajit Mishra joining us from Religare Broking to talk technicals. Morning, Ajit, and thanks for joining in. Talk to us about this trade setup. Is the Santa Claus rally likely to extend to the Indian markets, not just today, but for tomorrow and perhaps into the next week?
Yeah, good morning, Karanya. So, Karanya, basically the structure looked weak to us, especially when it comes to our markets. And globally also, if we exclude today's session wherein the US markets are up, largely you are seeing that bit of profit taking from the higher levels, and especially earlier it was select sectors which were participating in the move. Yesterday it was the banking also which slipped below the critical support. So I doubt that we're going to have a very strong rally from the current levels, but the positive or the silver lining is that the downside seems capped. So close to around 18,000, 18,100 levels in the Nifty is what we believe could be the area where market may take a breather. But when it comes to stocks, sector specific moves or stock specific, then we have seen several stocks, several sectors witnessing damage in this structure. So just to talk about the banking index first, so 42,900 is the area basically what we were eyeing as a critical support, and we were in fact seeing the outperformance from the banking space also till yesterday. But now after this breakdown, we feel that this banking, financials, auto, FMCG, which were earlier acting as a savior, now may also participate selectively in the negative side as well. So keeping that in mind, I feel that as long as we are trading below 18,400 mark, one should remain cautious. One should remain in a sell on rise approach, maintaining a sell and rise approach. But at the same time, one needs to be selective also, because not all the stocks or sectors are going to participate in the move in a similar manner. So Pharma, which were earlier on the back foot, looks slightly positive, but again, here also one needs to be sticking with the top names like Sun Pharma, Cipla, which are anyways trading around the record highs. So again, it's a very stock specific market with the overall view still on the sell and rise until we reclaim 18,400 in the Nifty decisively.
Okay, all right. Let's talk about some individual stock names as well, which could be in the limelight on back of news flow. The first one I want to flag off is Reliance Industries. Now, overnight, we got the big news that Reliance Retail has acquired Metro Cash and Carry for 2850 crore rupees. They've signed a definitive agreement to acquire a complete, which means 100% stake in the company. Remember that Metro India serves kiranas and other small businesses, merchants, and in FY22 it generated sales of 7,700 crore rupees. Now this definitely is very much in line with their retail and consumer business expansion. Let's see how it augurs on for the stock price, but talk to us about the technicals for Reliance Industries overall and what does it say?
So, Karanya, from last, in fact, 1.5 years, we are seeing this trend continuing, a broader trend continuing in Reliance with upper band around 2750 to 2800 levels and close to around 2350 to 2100 on the downside. So currently we are in the middle of the band, and in fact, of late we have seen that Reliance made a couple of attempts to rebound also from the short-term averages. But the zone close to around 2650 to 2700 is what we are seeing as a supply zone again. So for a very short-term perspective, I feel that this consolidation may continue, but comparatively, yes, the structure looks strong overall. And if you are a trader, if you have existing position, you can continue to hold with 2550 as a stop and 2750 as a target. But for fresh buying or any positional buying, one should wait for an decisive close about 2700 mark.
Okay, all right. Moving on to stock number 2, Bandhan Bank. They've got a binding bid of 800 crore rupees from ARC for written off portfolio, which has an outstanding of close to 8900 crore rupees. In fact, they had already received their board of directors approval for transfer of group loan and SBAL written off portfolio to ARC. Let's talk about Bandhan Bank. Last 1 week, of course, has been lackluster, but the last 1 month, it has sort of seen a decent rebound, adding about 13-14% on the upside. But the long-term trajectory for this year has been largely weak and disappointing. What lies ahead for Bandhan?
So yes, you rightly pointed out that the overall performance has remained subdued, and we are still not seeing this trend reversing, Karunya, until we see the stock sustaining above 265 mark decisively. Because the last time when we had the stock above this level was close to around in the month of April 2020. So after almost 2.5 years of consolidation, we are still seeing that the stock is languishing around the 52 weeks low. And whenever we see profit taking in the banking space, Bandhan Bank and RBL, they are the top 2 candidates to go short in. So I feel that for a very short-term perspective, I feel that negative bias is here to continue with 265 as a stop. One can still maintain short positions and initiate fresh shorts also with 225 as a target.
Okay, in fact, a lot of comments already have trickled in for banking stocks, not just Bandhan, but we have a query coming in from Vinod Kumar for Karnataka Bank. Vasudevan is writing us for Federal, SBI and Axis, largely all private sector lenders. Any of these that have caught your attention and has good potential according to you?
In fact, within the banking space, though we are seeing profit taking resuming in the banking space also, we feel that the dent could be limited, especially in the private banking names. So stock like Axis, stock like ICICI, SDFC Twins, we feel that participants should look for accumulating these names on dips and avoid PSUs for a time being now, because after almost a vertical rise, now we have started seeing a bit of profit taking and consolidation, and it will be too early to enter in especially apart from SBI, almost all the structure had almost a vertical rise. So wait for a consolidation or any further correction and let the stock stabilize around the short-term averages before making any fresh buying. But yes, private banks definitely one can accumulate on dips.
Okay. Well, Ajit, request you to stay on with us. Talking about consolidation, there's another sector which has been witnessing a fair share of pain, which is the pharma space. I want to touch base with Anubhav Sahu now from Moneycontrol Pro to talk about this particular sector. Hi, Anubhav. Could you run us through what exactly is happening in the pharma space, how the macros are panning out, and what is driving this renewed interest in pharma sector? Yesterday, we saw a very sharp rally.
Right. So even before the COVID surge in China, the entire macro setup was a little positive for defensives, and that's so because if you look at the interest rate hike cycle from some of the central banks or advanced economies, probably we are towards the last leg of hike cycle. But having said that, the guidance or projection is for higher rates for longer. Which is aiming at the curbing the inflation or reaching the inflation rate target sooner. Particularly in US, the idea is to have some credible demand moderation or destruction, which can ensure moderation in core inflation, which of course increases probability for recession there. And which in terms of investment setup, it means that this is probably not the right time to go aggressive on cyclicals. It's more a time to go incrementally, if you are under index, to go more incrementally, having a higher allocation to defensives like pharma. And probably look like the institutional setup as well. That's why there was some kind of interest even before what's happening in China. Now, coming to China, of course, mixed set of news flow. Of course, there has been quite a catch-up in cases. The healthcare system appears to be overwhelmed. But at the same time, symptoms are reported to be milder, and there is no substantial news as well as any reversal of easing or restriction from the government side. And at the same time, there is quite a debate on the virulence and mortality rate of the variant. And so it's quite early stage that to assume that probably the investment template of, for example, 2020 or 2021 will play out. And with that notion in mind, investors should not be rushing to pharma just because of the surge, right? And at the same time, we should also, understand what the experts are saying from the healthcare industry, that the immunity in general, because of either a vaccination or because of direct exposure COVID, is good enough. But having said that, it's a risk to watch out.
Okay, all right. But okay, you've discussed about defensives, but how is the US generics business panning out, and are there any preferences that you have or any concerns that perhaps you want to flag off there?
Yeah, so as far as the US generics are concerned, I think the old challenges of regulatory inspections as well as the pricing erosion, those have come back with the bang. I mean, as far as the regulatory inspections concerned, and of late we have seen some import alerts and warning letter coming to for the companies like Lupin, Sun Pharma, and Glenmark Pharma. Of course, there have been some relief for a couple of companies like Cipla and Zydus Life. Having said that, it's a mixed bag and net negative. On the pricing side, again, if you leave aside some of the one-off gains from the new launches like Revlimid and all, in general, for the legacy portfolio, the pricing erosion is in the range of high single digit to low double digit. So those challenges remain. So key to watch for US generics, of course, to look for how much is the new launches or the pipeline product pipeline is able to offset the pricing erosion in time to come. And that's why some of the large pharma generics are doing quite well, whether you talk about Sun Pharma, Cipla, Zydus Life, and Dr. Reddy's. However, we have recently turned neutral on Sun Pharma and Cipla because of valuations. Even though we do like, on a medium-term perspective, their product pipeline, for example, inhalation pipeline and peptide pipeline for Cipla, and for Sun Pharma on the specialty side for derma drugs and all. However, we see a lot of valuation comfort for Dr. Reddy's and Zydus Life, which are also doing quite well in increasing their share as the branded formulation is concerned.
Okay, all right. Any other segments within the pharma industry that that look interesting or that look promising from here on?
Yeah, of course, within pharma, actually, our preferred segments, subsegments is one that of CDMO, CRAM space, as well as hospitals. So in this case, we continue to believe in the secular narrative that the global innovators would look for research and manufacturing partners, expedite their product launches and optimize cost. And I think that this will only expedite because of economic headwinds in advanced economies as well as the cost pressures there.
Okay. All right, Anubhav. Thank you. Okay, Anubhav, thank you so much for joining in and sharing with us about what's happening within the pharma space, and also flagging up some interesting and promising stock ideas within the industry. Back once again to our technical expert, Ajit Mishra. Ajit, we have a comment coming in on Biocon. Since we're talking about pharma, can you tell us how Biocon is looking at the current juncture? Should one buy right now? Because looks like there is some double bottom formation happening there.
So yes, Karanya, so it's almost like nearly 2 years that Biocon made a record highs around 484 levels in the month of December 2020, and since then we are seeing that stock has been gradually drifting lower, trading in a declining channel. So it is currently trading around the lower band of that channel, close to around 260 and 250 zone is what we have support area is. And plus, we are seeing a bit of respite in the pharma space also. So stock like Oro Pharma, Glenmark, which was slightly on the back foot, unlike the stocks, Sun Pharma, Cipla, which are on anyways trading around the record highs. We do expect that there could be recovery, but yes, since we have multiple resistance to cross, the upside seems capped. So close to around 280, 85 could be the area where it might, face resistance first. And a decisive break above that same can help the stock to inch toward 300 levels, which is the long-term moving averages on the daily charts. So for a very short term, yes, one can look at Biocon also with 260 as a stop and 285 as an immediate target.
Okay, all right. Coming back to some more stocks in focus today, I want to talk about JB Chemicals. They've completed acquisition of Razel franchise from Glenmark Pharma. Now, Razel is essentially a cardiac brand which was owned by Glenmark in India and Nepal. And the transaction, or rather the acquisition, has been for close to 313 crore rupees. How's JB Chemicals looking on the chart, Ajit?
So JB Chemical looks very strong, Karanya, and the stock is still holding around the record highs. Yes, we are seeing a bit of consolidation around the record highs, but in a very narrow range. So the tone is still positive, and I feel that 1940 is basically the area where one should place the stop loss in case if you are holding existing position. For fresh buying and to see any momentum in the stock, we need a break above 2140. So for fresh buying, one should wait because it looks, it might spend more days in this range. But yes, the tone is positive. 1940 should be the stop. And since it's trading at the record highs, we don't have any major resistance, any resistance as such on the higher side. But as per the weekly charts, it might face a hurdle close to around 2250, 2300 levels.
Okay, all right. We typically don't track very small cap stocks, but I want to flag off D-Link India today. Why that is? Because Ashish Kacholia, ace investor, has sold close to 2.1 lakh shares, about 0.5% stake in the company, for 242 rupees, for 242.6 rupees per share. And remember, as of September 2022, end of quarter, Kacholia was holding 3.3% stake in the company, close to 12 lakh shares, as of September 22. Now let's talk about dealing. Of course, an ace investor selling stock of a company typically triggers some action on the downside. But not just today, but for the next couple of weeks, Ajit, how do you foresee the chart playing out for dealing?
So, in fact, Karanya, I would recommend investors and shareholders not to worry about this trade, because broadly, if you see that this structure, because in 2015 the stock was around 230 and it reclaimed that level after almost 7 years. So I doubt that we're going to see this entire move fizzling out because of one transaction. Yes, there could be a near-term pressure wherein the stock may retest the level close to around 220, 200 levels. But broadly, I believe that this zone close to around 200 to 220 could be the area where one can accumulate fresh, and 180, since it's a high beta counter, should be the stop. And gradually, we expect this stock to reclaim the record highs close to around 280, 300 levels.
Okay, all right. And the final stock on our list today, as far as stocks in focus are concerned, is Max Financial. The promoter, Max Ventures Investment Holdings, has sold 400 crores worth of stake in the company, which amounts to close to 59 lakh shares, 1.7% stake actually, at an average price of 679.2 apiece. How is Max Financial's technicals looking to you? How is it likely to play out from here on?
So currently, anyways, Max Financial has been, witnessing profit taking for almost like, 1.5 years now, and is still struggling below the major averages on multiple time frames. And for any recovery or any, rebound, we need a close above 720. So which seems unlikely because the recent attempt, they had almost like 4 or 5 attempts to reclaim those marks, but it couldn't sustain. So for a time being, yes, the sell-on rise till 725 is intact, and on the downside, close around 650, 625, which was the previous swing low, could be the area where it might retest.
Okay, all right. Moving on to some more stock queries then, Ajit, which have been lined up for you. Shashidhar is asking for your view on Patanjali Foods. It has of late, not just of late, of the last couple of years been a trader's favorite. But if we look at the performance this year, it has been not very impressive. Last 1 month, in fact, completely flat with a mild negative bias. So talk to us about Patanjali Foods and where it's potentially headed.
See, I would recommend, if your view is short term, the idea is, not to spend time with this stock or sector which is, witnessing underperformance. So similarly, I would recommend to exit this stock, and, HUL, Britannia, these are the top names from the FMCG basket if the view is very short term. But if you talk about, from the long term, perspective, so definitely you can continue to hold on. But yes, there could be a near term pressure below 1150 mark, which is the major averages, long term averages. In that case, the stock may slip towards 1050 to 1000 levels also. So one should keep in mind, and accordingly, as per the time horizon and risk appetite, one should take a trade.
Okay, all right. The next query is from Rashid. He wants your view on Tata Elxsi. Again, a very bad or a very negative year for IT space, and Tata Elxsi's case hasn't been any different. Let's talk about how it's likely to play out in the next few months. Do you see any kind of a rebound or revival, reversal taking place?
So yes, a short-term rebound is definitely on cards, but I doubt that it's going to negate the overall profit taking or a negativity that we are seeing in the stock. But it's obvious that Karunya, after like a move from roughly around 500 levels to 10,500 levels, it's obvious that the stock should consolidate and witness some a phase of intermediate correction also. That is what we are seeing in the stock, and I feel that with the short to medium term perspective, at least this tone is not going to change. So if the view is short term, I would recommend you to exit and switch to any large cap IT names which have already seen decent corrections. Stock like Infosys, TCS, wherein we are seeing rebound on every uptick in the IT index. So I feel that should be the ideal strategy instead of like staying in Tata Elxsi. And upside, in case if somebody wish to hold and see how the stock pans out, because we have a minor support around 6100 levels, then close around 6550 to 6600 could be the area where one can look at exiting.
Okay, fair point. Next up is Funny's query. He wants your advice on all cargo. How is that one looking?
So all cargo is still holding around the record highs, which is definitely a positive sign considering the kind of volatility that we are seeing in markets. And I feel that Sunny, this positive tone is likely to maintain as long as the stock has been holding 400 levels. So that should be a stop in case if the view is short term. And any rebound about 445 can trigger the fresh momentum in the stock and help the stock to inch toward the newer high. So as of now, yes, it's a hold with 400 as a stop.
Okay. Okay, I want to flag off fact fertilizers and chemicals Travancore. What a phenomenal jump it has seen, not just in the last 1 month wherein it has logged in triple-digit gains, but if you look at the last 1 week, also a strong 50-55% plus upward move seen there. Talk to us about what's going on, and this is a query as well coming in from Chirag. So if you could help him out, should he book profits and exit, or should he wait for a further leg up?
So yes, Karunya, it's almost like 100% kind of a jump in a month, and with that too with very strong volumes. And before that, but yes, the stock was consolidating in a very narrow range, in a very tight range. So that's why we are seeing this kind of reaction on the higher side with the stock witnessing 100% kind of like a jump in a month time. But if you say that I would like to invest fresh or trade fresh, so we don't have any major support to look at because there was hardly any consolidation in this entire move. like almost every day we saw that stock inched higher around 8 to 20%, on any given day. So for a time being, what one can do is, in case if you're lucky and holding this stock, till 280 should be your stop. Was closer to around the yesterday's low for the existing position, and let the stock move. In case if this momentum carries, chances are that there could be a bit of profit taking in consolidation in days to come. So partially booking profits and maintaining a trailing stop loss makes more sense.
Okay, all right. Moving on to Satya's query, they want to ask why Polyplex has been consolidating, and if you could share your view for the next 3 to 12 months of Polyplex. Their buying price was 1780, so the stock is clearly way below that, and they are incurring some losses there. We don't know the quantum of shares, but clearly 1780 was the buying price, 1604 is where it's perched at. Last 1.5 to 2 months have been extremely range bound for Polyplex. Talk to us about what could happen next.
Karunya is one of stocks, after these COVID lows, it moved from roughly around 200 to 2600 levels. So it's in a normal, correction. So at times we enter into a stock at the wrong price, even the good stocks turns bad. So that is what the case is, especially like in some of these stock that we have discussed of it, like Tata Elxsi and Polyplex. So I feel that since you are stuck and you don't want to exit this position, so that is not the ideal strategy. Especially if you have made a position for trading, you should have maintained stop loss. But still, I would say that the stock has a marginal support around this 1550, 1560 area. So that should be a final and ultimate stop. Otherwise, the stock might inch further lower towards the level of around 1200, 1220. In case if it witnesses any rebound, we have multiple resistance to cross, because 1700 and 1780 to 1900, there are multiple moving averages resistance plus the consolidation range resistance that exists. So any rebound, if the view is short term, if you are stuck, use that rebound to exit the longs. Okay,
all right. Shakti is asking us about your short-term view on Eicher Motors. Now, while the stock has seen a good 20-22% uptick in 2022, let's talk about the recent performance, which has been fairly flattish, lackluster, if one could call it that. Talk to us about the near-term view there from here on. Do you see this this range-bound trade continue, or could it have some sort of revival of sorts?
So yes, we are seeing that the auto stocks are also witnessing a bit of profit taking, and all the top names, stocks which have started the rally in the auto index. So stock like M&M, Eicher, TVS, we are seeing a bit of profit taking in all these names. But I feel that the trend is still not reversed. If you talk about from the short term to medium term perspective, short term, yes, you can say that the stock has been witnessing a bit of profit taking, but the quantum of decline is still very low in comparison to the other sectors and stocks. So I feel that in case if your view is medium term, you should stay with the counter, and if you are an investor, you can look for adding more in case if the stock reaches close to around 3100 mark. Because broadly, I believe that the stock is likely to hold 3000 mark from the medium term perspective, and in the next swing, we could see the stock making a newer high of around 4000 plus zone. So it's a medium term play. In case if you're okay with that, you can continue to hold. Otherwise, use any rebound around 3500 levels to exit.
Okay, all right. What about your own stock ideas, Ajit? Which stocks are you eyeing?
So for the obvious reason, Karunya, because we are seeing a bit of a recovery in the pharma space, and within the pharma space, the top performing name Cipla looks very strong to us. So the stock has been witnessing a bit of profit-taking consolidation, but still it managed to hold above the major averages. So, and in yesterday's trade, we saw a very strong rebound with recovery in the pharma. So I feel that in the near term, close around 1195 to 100 could be the area it might test. So with stop of around 1095, one can go long in Cipla. At the same time, since the tone and structure of the market have changed negative, one should maintain few shorts also. So Deepak Nitrate, yesterday we have seen a fresh breakdown from a distribution pattern, and it looks like that a level close to 1900 is what it might test. So with stop of around 2130, one can go short in Deepak Nitrate.
Okay, all right. So a buy on Cipla and a sell on Deepak Nitrate. Thank you so much, Ajit, for joining in and for sharing your picks, your view on the market, and helping our viewers out with their queries. With that, it's a wrap on Morning Trade. Thank you for watching.